In today's video, we shall be covering the basics of Forex trading, like what is Forex trading, benefits of Forex trading, what are Forex markets, and how you can earn money with Forex trade. So let us first understand what is Forex trading. In simple terms, Forex trading is the buying and selling of currencies. The exchange rate of a currency changes all the time, and Forex traders try to capitalize on these fluctuations. They buy currency at a lower rate and sell it at a higher exchange rate. In India, the rupee is generally evaluated against the dollar. So how can you benefit from the exchange rate? Let us suppose you're traveling abroad and you need $100. And the rupee dollar exchange rate at that time is 70 rupees. So you will have to pay 7,000 to get 100 US dollars. But you decide to wait for some time before buying dollars. In a week's time, the exchange rate declines to 69. So now you will have to pay 6,900 to buy 100 US dollars, a benefit of rupees 100. In a similar manner, Forex traders capitalize on currency fluctuations on a much larger scale, magnifying the profits but also considerably increasing the risk. Forex markets. The Forex market is a place where participants can buy, sell, exchange, and speculate on currencies. The currency and foreign exchange market is considered to be the largest financial market, its daily turnover surpassing that of the futures and equity markets combined. Benefits of Forex trading. There are many benefits that you can reap from Forex trading. But to monetize on the benefits of Forex trading, you need to have a very good knowledge of the industry and the global economy in general. Here are some of the benefits you need to know. Number 1. High liquidity. Forex is a highly liquid market mainly because of its sheer size. The currency market is considered to be the largest financial market with over $5 trillion in daily transactions, which is more than the future and the equity market combined. You can never get stuck in a trade. Number 2. 24-hour market. From Monday morning opening in Australia to afternoon close in New York, the Forex market never sleeps. You can choose the hours that you want to work in. Number 3. No fixed lot size. In spot Forex, you determine your own lot size. This helps traders to participate with small account as per their convenience. How can you earn money with Forex trade? First of all, what you need to keep in mind is that Forex trading is not a shortcut to getting rich quickly. It requires a lot of understanding and patience. Foreign exchange rates are dependent on a lot of market and economic factors such as exports, imports, crude oil prices, market drivers, and many such more. Let us understand how you can make money in Forex trading. Suppose, due to some economic variables, you expect the rupee to depreciate. That is, you think that the rupee will lose some value against the US dollar and buying the US dollar will become more costlier. Assuming the US dollar is trading at 70 rupees and in 2 months the price is expected to move to 72. A trader can buy 1000 US dollars for 70 rupees now and the total cost of the transaction will be 70,000 rupees. After 2 months, the price of the US dollar moves to 72 rupees. Here he goes out in the market and sells those 1000 US dollars and he will be earning 72,000 rupees, a profit of 2,000 rupees. But do not make the mistake of assuming that Forex trading is as simple as explained in the example. In real time, the trading goes much deeper, involving applications of several techniques like Forex future, Forex options, and swaps. If you like our video, give a thumbs up below and subscribe to our channel. And visit our website www.edelweiss.in.